July marked another month of intense investor focus as the actions of the U.S. Federal Reserve and near-term macroeconomic trends. The S&P 500, NASDAQ Composite, and Dow Jones Industrial Average all reached record highs during the month amid anticipation of a Fed interest rate cut. The central bank acted as expected, announcing a 0.25% reduction to its benchmark overnight bank borrowing rate. This was the first such cut since 2008 and the Great Recession. Meanwhile, the first estimate of U.S. economic growth for the second quarter was 2.1%. While modestly better than expected, growth was not as strong as the first quarter this year. Consumer and government spending were positive contributors to second quarter growth, while business investment declined. Britain now has a new prime minister, as Boris Johnson took over for Theresa May, who resigned after the government failed to negotiate Britain's exit from the European Union. A person viewed by many as a polarizing figure, Mr. Johnson has promised that the UK will leave the EU on October 31st with or without a deal. The prospect of a no-deal Brexit created fresh uncertainty for the UK and European markets. Finally, our July chart of the month illustrates the divergence of the S&P 500 and the 10-year U.S. Treasury yield. While the S&P 500 reached new highs in July, the 10-year yield sunk to a nearly 3-year low. Typically, bond yields fall during periods of economic uncertainty, which rising stock prices would seem to contradict. The decline in bond yields could help explain why the Fed may be acting preemptively despite low unemployment and continuing economic expansion. To see how these events affected our fund performance, please check out our latest monthly investment report, which is now live.